This is an interactive video session that will help you to improve the skill of analytical thinking in digital borrowing. Having this skill means that you are able to 1. Assess and compare various digital credit and loan options. 2. Analyze the potential impact on personal finances. 3. Evaluate which products best align with your financial goals and capacity to repay. 4. Understand responsible borrowing practices and avoid excessive debt to maintain financial well-being. 5. Weigh the pros and cons of different digital borrowing options to select the one that provides the best value based on your needs. Let us analyze some of the key aspects of digital borrowing. Step 1. Assessing and comparing digital credit options. To begin with, to make smart financial decisions, you need to understand the differences between credit cards and loans and how each can impact your finances. Let's consider credit cards. They can be super handy because they let you borrow up to a certain limit. Besides, they are great for everyday spending or covering unexpected expenses. But here's the thing. If you don't pay off the full balance each month, those high interest rates can add up fast, making your debt grow quickly. Plus, since credit cards are so easy to use, you should be careful not to overspend. Loans are a bit different. You will get a set amount of money up front, and you'll have fixed repayment terms, which can make budgeting easier. But watch out for things like payday loans. They often come with super high interest rates and short repayment periods. If you can't pay them back on time, it can get stressful pretty quickly. So, just take a moment to weigh your options before deciding what works best for you. Imagine this. Your car breaks down unexpectedly and you need it to get to work tomorrow. The repair will cost €200, but you don't have the money saved. What should you do? A. Use your credit card. B. Take a payday loan. C. Ask a trusted friend or family member for a short-term loan. Each option has benefits and drawbacks. Credit cards are convenient but costly if not managed well. Payday loans are high risk. Borrowing from someone you trust can be the safest and most affordable option, as long as both parties agree on clear repayment terms. Step 2. Evaluating the impact of borrowing on personal finances. To begin with, practice budgeting and saving to prevent falling into debt cycles. Before borrowing, you need to carefully assess your current financial situation and budget. Ask yourself, can I realistically make room for loan repayments without sacrificing important expenses? At this stage, digital tools become essential. They can simplify your loan decisions and give you a clearer picture of your repayment ability. For example, use loan calculators to estimate monthly payments and total borrowing costs. Likewise, budgeting apps can help you plan your income and expenses to ensure your repayment fits within your monthly budget. It's also important to remember that borrowing is for short-term needs, not long-term fixes. If it causes stress or financial issues, it may mean that you are relying on it too much. In short, evaluate your finances honestly before taking on any new debt. Step 3. Choosing the right products that match your financial goal and ability to repay. Before choosing a financial product, clarify your goals. Are you saving for a big purchase, covering unexpected expenses, or investing for growth? For instance, short-term goals like a vacation may be best supported by low-risk options such as savings accounts or short-term loans. Meanwhile, long-term goals like retirement may benefit more from investments like stocks or mutual funds. Before deciding, evaluate your income, current debts, and monthly expenses to ensure you can manage any new financial commitments. Always read the terms and conditions of any financial product carefully, focusing on the interest rate, hidden fees, and repayment period. In conclusion, choose financial products you can afford to repay. Also, make sure you have enough funds to cover your everyday expenses and extra savings in case of emergency. Explore simpler or cheaper alternatives by comparing options and choosing a product that best fits your specific needs. Step 4. Understanding responsible borrowing practices. Before borrowing, ask yourself if the loan is truly necessary or if you can save instead. Only borrow what you can comfortably repay without affecting your basic needs. Once again, always read the fine print to understand the interest rates, fees, and repayment terms. Consider Jane's story. A few years ago, she took out a digital loan without reading the fine print. At first, it seemed convenient. Fast approval, easy process. But in the end, she ended up paying almost double due to hidden fees and high interest. That experience taught her a valuable lesson. Now, Jane always uses financial apps to compare different loan options. She only borrows when it's absolutely necessary, and she takes time to understand all the terms beforehand. Furthermore, borrow only from reputable lenders. If you're struggling to repay, reach out to your lender for options or seek guidance from a financial counselor. Step 5. Weighing options and making decisions. Digital financial borrowing allows you to quickly access loans with minimal paperwork, often making it a convenient option if traditional banks are not accessible or your credit history is poor. However, it's important to be cautious as high interest rates, privacy risks, and the ease of borrowing can lead to costly debt or scams if you're not careful. Here is a challenge for you. Try using a budgeting app or loan calculator to simulate taking a small loan, for example, €100. Step 1. Calculate how much the loan would cost you each month, including interest and fees. Step 2. Check if you could afford the repayment without cutting back on essentials or savings. Step 3. Ask yourself, would you still take the loan, or would you consider a different option? Make smart decisions. Remember, smart borrowing today leads to stronger financial stability tomorrow. Happy borrowing!